In today's session, we are seeing the equity segment in the US doing quite well. If we consider the Nasdaq, it is looking like that Nasdaq is resuming its upward momentum, and in course of time, it is likely to go back to its prior highs closer to the 14,000. For last couple of days, it has been consolidating closer to the 13,700, and it will be important for it to see a breakout, and after that it should be able to sustain above these consolidation highs, and only then I think we can expect to profit from these trading opportunities. So let's get started. If we consider the data rocket for the day, there were not many releases of consequences in the Asian as well as European trading session, and as the US session began, we have these some key releases to ponder on. We have the initial jobless claims, which are continuing to hit new lows, new pandemic lows. Of course, in pre-pandemic days, these used to be a lot lower, but after the pandemic began, we are seeing these new lows as most of the economic restrictions on economic activities are being lifted in the United States. More and more job opportunities, employment opportunities are being created, and as a result of that, the people applying for the jobless claims are falling. And for the weekend at 22nd of May, we have the figure at 406,000, and it is lower by 38,000 compared to the prior week. But if we consider another key data point which was released at the same time, the durable goods orders, there were expectations that we might see the rise of around 0.7% for the month of April after the prior month's continuing uptrend, but that didn't really materialize. And I think the main reason behind these lower durable goods orders is supply constraints, and as the demand is continuing to outstrip the supply, and supply chains are failing to keep up, we are seeing that the durable goods orders have turned lower. But I think in next couple of months we are again likely to see these rising, as has been the case for last many months. And I think this is the first time in almost a year that we are seeing the negative reading for these durable goods orders. Now let's shift our attention to the technical segment. First, we will consider the Nasdaq's technical outlook, and after that, we will also take a look on the currency segment where the instrument of choice is Euro USD. Let's start with the Nasdaq's technical outlook. This is the daily time frame chart, and here you can see that Nasdaq has been on the upswing for last many days, and after making a low closer to the 13,000, which was also the level of 61.8% Fibonacci retracement of its prior rally, the double bottom kind of formation took place, and we have these revival and continued gains being seen in the Nasdaq. And in today's session also, after trading lower in the initial hours, we have again seen upward momentum taking hold. And as I said in my opening remarks, we are likely to see these upward momentum sustaining, and in the course of time, we can expect the Nasdaq to get closer to these all-time highs above the 14,000 levels. So if we want to profit from such a possibility, of course, we will have to look to optimize the entry and exit points, and to that extent we can rely on technical parameters like the regression curve and the pivot point series. We have this central pivot point around these 13,700, and that's where the Nasdaq has been consolidating for almost a week now. And I think if we see the closing for today's level happening above this central pivot point, then that will be a confirmation of sort. And in next session, we are likely to see a clear-cut breakout and a sustained move on the higher side. And as this consolidation has unfolded, we didn't really see significant correction, and that gives us the idea that not many people are willing to go short on the Nasdaq. And if not many people are willing to go short, the obvious choice is to go long, and that's what we should be doing. And if we consider the regression curve, it has also inclined on the higher side. And if we see this continuation of the upward momentum, I think it is likely to steepen, not flatten, in coming days. So if we want to look for the trading opportunity in today's session, I think the long entry can be taken anywhere in the price band of 13,650 to 13,700, while keeping the stop loss closer to the day's low around 13,600. And on the higher side, we can expect at the minimum the move towards 13,800, and that might happen today or it might take a couple of days. But given the momentum has been bullish and is still bullish, we can rely on the upward momentum and take the bait in the direction of the trend. And we can utilize these 50 and 100 SMA. The 50 SMA can be considered the price level to go long, and the 100 SMA can be utilized as a possible stop loss level. So if we see that the momentum is sustaining, if the price action is holding above these 50 SMA, then I think we have the reason to be confident in this trade. And as I said, the stop loss is going to be closer to the day's low. And here the risk reward ratio, if you want to go for a 1 is to 2, then you will have to extend the target price beyond 13,800. And to make it optimum, I think we should try to get the entry as close as possible to the 13,650. And that's why we have to keep an eye on the unfolding price action in the US session, and keep in mind this price band of 13,650 to 13,700. Now moving on to the currency segment, let's see what's happening in the Euro USD. This is the daily time frame chart, and in the last session, I had talked about the possibility of a correction taking place in the Euro USD, and as anticipated, it has unfolded in the yesterday's as well as in today's session. We are seeing the bearish momentum. In today's session, the price action has been in a happening in a very narrow range. We didn't really see any big momentum, but the undertone has been bearish. And on the higher side, the Euro USD's gain, at least for near term, seems to be kept closer to the 1.225. And I think this correction can extend toward the 1.21 level. So we will be looking for the entry points in the session. So if we want to keep an eye on the technical parameters, I think these pivot point series can be quite helpful. We have these first resistance around 1.22, and that's where the price action has unfolded in most of the day. And even now, its upside is being kept by these first resistance. And I think if we don't really see any clear cut breakout and sustaining of the price action above these first resistance, then more market participants will get convinced that this is time to bet on the correction in the Euro USD. And if we consider its prior rally, the Euro USD has rallied strongly, and now it's almost a month, not exactly a month, but I think 2 to 3 weeks that it has consolidated in a narrow range, and its gains have become incremental. And even if we consider these immediate price action, here the formation has been in a tight range, and though the formation is still of higher high, we have reasons to believe that if we get the breakout below these immediate swing low, then in course of time the price levels of 1.21 can be expected. And if we consider the regression curve, it is still inclined on the higher side, but the price action has moved to the lower band, and any break below this lower band will be crucial to watch out for. So So if we want to go for the trade, I think the convergence of 50, 100 and 200 SMA, which is there in the price band of 1.220 to 1.222, can be exploited for any fresh entry while keeping the stop loss anywhere above the 1.224 or closer to 1.225. And for the trade, you will have to take the risk of around 20 25 pips or at the max 30 pips. And on the lower side, we can expect the decline to extend at least beyond these prior swing low, the low established in the last week. And that is going to get us the risk reward ratio of 1 is to 2. And in today's session, the price action has been muted, so I'm not really expecting this move to happen in today's session. But if the Euro USD keeps lower below this convergence area, this is likely to act as a strong resistance area for the Euro USD, and that's why I feel the entry anywhere in the price band of 1.222 to 1.220 is going to bring us quite a good probability of making money in this trade, and the risk reward ratio also seems favorable enough. Of course, the stop loss is a bit wide at 25-30 pips. It is wide for intraday trade, but here, given the momentum, I think we can even keep the position sizing lower and keep the trade open for a day, couple of days. And in that scenario, our chances of hitting the target price will be a lot higher. So that's my take on the Euro USD's technical formation. If any of you have any query or any idea to share, you can write to me in the feedback section and I would be more than happy to take the discussion forward. Before I sign off, I would also like to remind of the risk associated with trading in the financial instrument, and one should be careful while using the information provided. Have a fabulous day ahead. See you next time. Do subscribe to the Ducoscopy webinar channel. Goodbye.